Hi, thanks so much for tuning in. You're watching BQ Prime, and we're here to talk about the results of Westlife Foodworld. And I think the results of this company, more than several others, indicates that COVID-19 is well and truly past us. Joining me to talk about the earnings is Akshay Jatia, the Executive Director at the company. Akshay, thank you so much for taking the time.
Thank you. Excited to be here.
Okay, so revenue growth, 48.5%, same-store sales growth at 40%, improvement in gross margins despite cost pressure. Does that essentially sum up the key developments, or was there more in the quarter gone by?
No, that's absolutely correct, Alex. And thank you for acknowledging that we've done a great job in terms of ensuring our growth momentum continues as we got out of COVID. And I think it's a testament of how our strategy is working. We've kind of positioned it, backed it by three levers. One is around brand strategy and menu. The second is our omni-channel approach, and the third is growing volumes to increase our market penetration through store expansion. So as a result of that, we are being able to post good comparable sales, good sales growth, and also margin is something that we've been able to work well on.
Okay, I want to talk about menu because one of the pillars that you mentioned was menu. And I've read about the introduction of fried chicken, which I am yet to try, by the way. But it seems to be doing well for you, and it seems to have quite a large addressable market. Tell me about the introduction, and are you introducing it pan-India in all of your stores? And how is it contributing to revenue?
Sure. So it's actually been introduced primarily in South India across all our restaurants. And it started with a consumer insight that, our target audience in South India prefers to have a lot of their meals with bone-in chicken, a particular type of taste and bite. And as a result of that, we worked on this product for a few years and then kind of put in some tests and then rolled it out in around 2020, actually, just about when COVID hit. So it's taken some time to build it up. As soon as things got better, we've seen great traction in South India. People are loving the product. It's called McSpicy fried chicken. It's juicy and spicy to the bone, and it's differentiated our product from the rest. And as a result, it's driving very good incremental volumes in the South, as well as its established product market fit and brand relevance. We do have it in some. Have it in some.
Sorry, go ahead.
We do have it in some stores in the West, but that's just a test that we're on.
Okay, so therefore my original question, when you're rolling out to the rest of the stores that you have, and what is the kind of revenue generation capability that it has?
Sure. So as of now, it was catered more for South India, and it's part of our overall chicken platform. We are trialing it out in our other region. However, as of now, we see it more as a South India play. In the West and pan-India, we're working on a holistic chicken platform, so other forms of chicken. And, as and when we introduce those products, we'll definitely be very happy to share.
Okay. Another interesting lever has been McCafe, right? And it is now, as I understand it, at over 80% of your stores. What is the kind of improvement in operations that you've seen? Is that one of the factors that has driven same-store sales growth in a big way? I think you've gotten it better than your peers in the recent past. And what else are you expecting to do with the McCafe franchise?
Sure. Thanks. So, McCafe is something we introduced around 2013-14. It's a differentiated business model where we have a counter in the restaurants and serve handcrafted barista-made coffee at a very good price point. So as a result, like you said, it's been doing very well. Customers are loving the product. They're loving the value we're offering them, and as well as the experience. So as a result of that, we've scaled it out to 80% of our restaurants. It's because of this holistic strategy is differentiated and doing very well. And it's adding to our incremental volumes because of our diverse, product portfolio. So it not only increases sales and adds incremental sales, it's also got a good margin profile as it's a beverage offering. And as a result of that, it adds to meals. People come for a new occasion to just have coffee in our restaurants. And, it's aiding both the top line as well as the bottom line.
Okay. What's the plan on desserts? Because I think that is also something that you're contemplating. And this is going to be under McCafe, is it?
So, the beauty about McDonald's is that we stand for burgers, chicken, coffee, desserts, because we're a multi-category, multi-day part play. So, we already have multiple desserts at our front counter, our McFlurry range, our soft
Right.
serve range. People have been loving it, since we entered the market. And we're continuing to build on that. I think it's a huge opportunity, but, part of our product play and portfolio play. So we currently have a very interesting promotion running with Nestle, which is a Kit Kat McFlurry. And, I'd really encourage you to try it. It's something that customers are really liking. And we're going to continue to build on initiatives like this. Under McCafe, we do have, some food offerings on the sweeter side. And again, we're going to continue to build on that.
Fair enough. I'm curious about contribution of revenue from stores outside the metro cities and the plan for expansion. As I see it, more than 200 stores are going to be added over the course of 3 to 4 years. What's going to be the spread? And currently, what's the kind of learnings that you have from stores outside metros?
Sure. So, we actually shared in our commentary and our earnings release that non-metros are actually growing around 1.6 to 1.7x of metros. That's because, we've firstly, entered these cities through destination stores. We've entered them over a period of time where we've been able to establish brand relevance as well as product market fit. So non-metros, tier 2s, tier 3s, brand relevance is high, product market fit is good, and McDonald's is being viewed as a destination. So we're seeing very encouraging average unit volume there. And newer stores also that we're opening in these areas are starting to start better as well as do better. So, so newer stores that we're opening in these areas are also starting well and continuing to grow average unit volume. So our focus moving forward is going to be to expand across key cities as well as in our tier 2s and tier 3s, where we're seeing a larger focus on tier 2s and tier 3s and increasing our average unit volume.
So tied to that, you're actually seeing quite a bit of traction on the application and on digital platforms as well. I think over half of the sales that you do, if I'm not mistaken, in volumes, is driven by those online channels. What is the plan? Because a few of the players in the F&B space are going a little slow on hard assets or brick and mortar, and they're looking at driving sales through this channel or the digital channel. You're still going to add 200 stores.
Correct. So, we look at it, Alex, as an omni-channel approach. And as a result of that, both online as well as our physical restaurants make a lot of sense because, that drives our ability to drive volume. So not only do we have a lot of incremental sales coming from these digital channels, our offline sales and our physical store sales are also increasing as people are using McDonald's more and seeing it as a destination for their families as well as, multiple locations. So as a result of that, omni-channel is adding to volume and omni-channel is kind of our strategy moving forward.
Fair enough. Finally, I'd like to address the gross margins. You've seen an expansion despite, I think, pressure on milk as well as wheat. And again, I think that is related to price increases that you took in October. Have input pressures settled or are you still seeing pressure, and will you have to adjust prices in any way?
Sure. So, how we view inflation actually is that firstly, India is a high food inflation market. And it's something that needs to be seen over a period of time. We have seen hyperinflation at the beginning of the year, and we navigated that. So, we're not really strangers to it, but you need to handle it carefully. So, firstly, we manage our kind of gross margin situation through 3 levers. One is our pricing strategy. So, at the right time, we do take price, but it's a science as well as an art. We ensure that it doesn't impact the value for money we give our customers, and at the same time, aids our volume as well as our margins and our business model. Secondly, we remove cost regularly from the system. And thirdly, our product mix play and our product portfolio that we spoke about. So as a result of that, you've seen improving gross margins in this pretty negative scenario and improving volumes as well. So, the price tag that we took recently was more, part of our plan. It was a planned one. And it's been only 2% in the relative basket. Our overall price tag for the year is, far lower than the competitive landscape. And even over the last couple of years, we've managed price to ensure that it doesn't impact our, value for money equation. So gross margins have improved this quarter, and we hope to continue building on it.
Just one last question which occurred to me, and you pointed out that you will have an omni-channel approach, but I was thinking about the drive-through option that you have, I think at 20% of your stores. As I understand it, there are three channels there. For one would be your digital option, the second would be in-store, and the third drive-through. What is the kind of split that you see on a consistent basis going forward? And is there a plan to increase drive-through further?
Sure. So, that's really correct in terms of our focus on drive-thrus. We see it as an integral part to our expansion strategy moving forward. McDonald's globally actually is a drive-through leader. And it's a competitive advantage for us because these stores, not only are they destination stores, they drive very strong volumes and incremental volumes. And there's actually no cap to the volumes that they can drive because of the way they're structured and the way the operations run. So it is a very, big competitive advantage for us and a focus for the future. It not only drives volume, but it also adds to our multi-channel approach, like you said. So, not only do we have delivery and our offline stores, we also have drive-through, which is a play that's going to help us increase our average unit volume and hence, deliver on the financial metrics that we aspire to achieve.
But there's no thinking about a specific split of volumes among the channels. You're happy with whatever comes your way.
Yes, definitely. Because, again, it's omni-channel, right? Same experience, same journey through these channels that we want to offer our customers. So they won't experience any sort of different McDonald's. And even from a, financial profile, all incremental sales is margin accretive to us.
Fantastic. Thank you so much for taking the time. Pleasure speaking with you.
Great. Thank you so much, Alex. It was a pleasure speaking to you too.